Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Swiss. It's making a break for it. Let's see what that looks like technically. I'm going to start by looking at the daily chart, and you see this low floor here that has been established in the month of June. That level came in at 0.8883 or thereabouts. You have a number of different swing lows coming down to that level and finding support buyers over the last few weeks of trading, first couple of weeks of the month. And that level also happened to correspond near the 200-day moving average. That's a green line in the chart. And also the 38.2% retracement of this move to the upside. As most people know, I like to see after a trend type move, if the market corrects more than 38.2% retracement, it's sort of my bogey that the sellers are a little bit more serious. And that wasn't proved until the recent move to the downside today on the break below that 38.2% retracement, on a break away from the 200-day moving average as well. This is a key break. It shows that the sellers mean business is also breaking below both the 200-day and the 38.2% retracement. Now, staying on this daily chart, we are now testing the next swing level. That level comes between the 0.8819 and 0.8838 level. It was defined by a number of different swing lows and highs going back in time. You can see the number of times that the price came to this area and either found either support buyers or resistance sellers, or combination of both, I guess. Yes, the price moved up below those levels, but just a number of different times where the market has reacted to that level. So here we are within that area between 0.8819 and 0.88379. Break below that level, and we'll look obviously toward the 50% retracement of the same move to the upside from the November, or actually December low, to the high price that we saw in the month of April or May, and that level comes in at 0.8777. Taking a closer look at the hourly chart, you can see the floor that was developed down here. That level also corresponded with that 38.2% retracement on the daily chart, not shown on this chart, of course. But one of the other clues that we've seen recently in this pair that suggested the downside was the way to go was the inability to stay above the moving averages through here. The market fell below those levels. The break below this floor area right through here in trading that we saw last week and early in trading yesterday, and the high price that we saw in trading here today came right up to that old floor level right through here. That was another tell from the market and trading here today on the corrective move to go move back to the downside. I guess that happened yesterday. Also, today's high price today did find resistance against the 200-day moving average, which gave the sellers the confidence to push to the downside. So sellers are in control, seeing a sharp move to the downside, heading toward the next target of the daily chart swing area. That's my technical look at the dollar versus Swiss. Good fortune that you're trading. Bye-bye now.